and a warm welcome to one and all. And if this is your first time here, I'm the overgrown child that is the scruffy trader. And what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, do smash the subscribe and like button. Genuinely motivates me to do more. If you want to see future updates, check the link below and find me on Twitter. So what are we doing? Well, it's very simple. This is part 2 of some interviews that I've done with the trading nut, Cam Hawkins. Now, the first video, which you'll find it in the library, was my journey of how I became what I am today. And today is a breakdown of how I set a chart up and why I set a chart up. Now, when I spent some time with Cam, I did send him my statements of my wage accounts, etc., and explain fully how I do things, but more importantly, why I do them. Because from the outside world, when you look at my trades, it looks mental. But it's not. It's actually very structured and very methodical. And the way I stage into the market actually makes my exposure and risk very limited. Whereas on the outside, to those who don't know, it looks like I am just being silly, really. But I'm not. I'm actually following a banking practice. And that's what makes me profitable, because my risk and exposure is actually quite small. And if you're interested in sort of robots in EAs, etc., Cam from the Trading Nut was that impressed with what I did. He incorporated and asked me if I could help. And he's made a robot based on somebody else's overall strategy, but my entry and money management built into it to protect the accounts. If you're interested in that, I've dropped a link to Cam below, and that'll take you to his Robot Builders Club, and you can see what it's all about there. But in this video, it's my style, what I look at, why I look at it, and maybe give you a little bit of inspiration for yours. So check it out, see what you think. I'm always interested in your comments, so please drop them below, because I genuinely answer every single one of them personally. And I'll see you on the next one.
Well, we're waiting.
All right, folks, here we are on Trading Up. We've got Gary Langley back in the house here after doing an amazing podcast. You got to go and check this out. There is a link underneath this video. So, Gary, welcome to the show again.
How would you do?
Today, you're going to find a way that, well, you're going to see how Gary filters down all the markets you can possibly trade into the ones that are going to pop today for him. So, Gary, do you want to share your screen? Because you got a few things there. You got a spreadsheet and the chart. So let's have a look.
What we're looking at here is a current statement of an account, decent profit in it. And in the period that we're looking at this moment in time, decent equity curve. The win rate going back to the 1st of December last year has lost 3 days. Okay, so I'm quite pleased with that. So I'm holding up my win rates, and in that period there's 464 trades at 90% hit rate and a profit factor of 4.11. Now anything over 1 is deemed profitable and sustainable. Now as you move down, you can see they were closed out today. 22nd was the last ones that I did. Okay, so it's kind of a current statement to see where we are. Now, the first thing I do each morning is I'll build this. Now, this to the outside world looks mental. But to me, it just makes perfect sense. It just helps me read the markets. Because if I was to try and analyze all of these markets to trade, I'd be at it all day. So I needed a filter that will kind of close it all down and help me. And that's what the market pick is. And the market pick is made from the currency strength. It's looking for the strongest and the weakest. And these numbers are made up from It's a volume profile, so it's like how much volume's in it on particular time frame, waves of the market, and then a couple of indicators and their score, etc. And it kind of spits out values and gives me a strength. Now, it takes me maybe an hour or so to do it, and that's the first job I do each morning. Once I've figured out what the strength is, I'm also looking at the change of strength, because what essentially I'm doing is I'm looking for the movers and the shakers of the market, and it's the movement I'm looking for, not the direction at this moment in time. I'm just wanting to see if I can pick a product out that'll shift. Now, I also have a little box down here, and all of these will move at any one time. You know, they're the majors. You will find a trade out of these every day. And the market that I look at every day is cable. And you'll kind of see that in my statement is predominantly what I trade. But if I can't see anything there and an opportunity comes up from one of these, then we're good to go. And basically what I'm looking for here is I can see the Aussie and I can see the US is in that pot. It'll pull it out and it'll tell me that's probably the better of the bunch. So if I can't see anything in cable, I'm going to start looking at the Aussie US. Okay. So that's what that does. This part of the engine on this side tells me which chart to analyze. So it looks at the ATR and kind of works it out, which is the best chart to look at. So it's telling me sort of Aussie US, it's the 1 hour. Okay. And then I have another engine on the back of it, which is kind of this, which is kind of helps me work out what's going on. And again, I plug a load of numbers in and it'll spit out a bias. Now for the pound this morning, pound US, it's telling me to buy it. Okay. So if I come into this market, I pull over my screen, we can have a little look at it. Okay. Now, when you first look at this, if I take these indicators off, just for now, and we're looking at just the levels, and I move this out to a daily, you'll go, what is going on here? That is horrendous. And you'll be right in thinking that, because it is horrendous. But each one of these levels has a significant failure or swing point, and they're all based on the high time frames. So you can see it's swung down here, swing, it's failure, swing, and then interweaved within them are strong fibs based on a significant low and a significant high, and that is done through multiple time frames. And when you look at it here, it looks brutal. It's like, I can't read that. And if you were looking at it on a weekly, it would look even worse. You would think, Jesus, how do you read that? Well, you're not meant to. It is only giving you your levels. Where you're reading your chart for your day trade is down on your hourly. Now, once you're down on your hourly, this looks nice and clean, you know, a lot cleaner than what you've just been looking at. And if you've got an idea that you are about to go long and you're moving from said level to said level, you have a framework, and that's what this does. And then you've just seen a Bollinger Band oscillator. I like an RSI as an oscillator, and what it'll do for you is it's telling you where the extremes of the market are. And if you've got an extreme on a Bolly, an extreme on an RSI, couple that with a level, whether it's a Fibonacci level or a standard level, it creates a bounce point or area of activity. Now this morning, from there to there, just as we were talking, this has just bounced out 23. So there. So it just scaled in a little bit, bip, then up, job done. All right. Happy days. Now, if I can do $50, $100 a day just doing this, I'm quite happy. And my sheet pointed out that this was a buy. Well, there it is there coming up in front of us. And if I drill this down even further into a 15-minute, which is my preferred sort of watch chart, if you like, you can see it's come down, it's come back to here. If you want an entry point, you can take it to a 5-minute chart, come back, it's closed above the level, pop your order in above, and then let it run into the level, and up it goes. And it's that simple, guys. And that's kind of the way I would break down a chart and understand a chart. And then the next part of it is just don't be greedy. You know, I'm happy to go from there to that level, and if I'm out, fab. If it keeps on running, I'm not going to worry about it. I've been paid. But if it goes against me, which is what a lot of people ask, you're looking for 2 points. Now, you can see a swing there, but if I come back over to the hourly, just to give you an example, this is my area of interest where we were trading just now. You have a swing point here. Now, the chances are it can come down and test and then bounce back up, but you have a secondary one down here, which kind of ties up with this failure there, and that's where your levels come in. So instead of hiding sort of underneath this swing here, this candle, which it will probe down, as you see it can, hide it under here. And an easy way to do that is, again, just get a Fibonacci tool out, just like so. Pull it down to roughly where you want your stop to be, just down there. Wherever your entry is. So for argument's sake, it is there. This is just really rough, guys. Just like so. And then it's measured out, because I will normally split by 5. So entry, so that'll be entry 1, 2, 3, 4, 5, down to this level, and the stop just hidden under there somewhere. So it stages in nice and evenly and down, and if it pops in, gets the next one, fab. And if it runs up, we get a better risk reward. And that's kind of the watered way that I look at the markets and build up a chart. But everything I do is based on levels. I am looking for the price to either come and bounce off that level, or if I'm looking for it to continue its journey rather, I'm looking for it to break the level and close above, and then off we go. So I hope that makes sense, and I genuinely hope it helps.
Hey guys, and guys, if you sort of don't know what Gary's talking about here around waiting for the price to sort of go against you and stuff, we go into a lot of detail on that in the actual show that the podcast we've just shot. So do make sure you go and check that out. There's a link under the video here. Gary, what's the best way for the guys to get hold of you?
Easy, just straight on my blog, which is thescruffytrader.com, or you can email me info@thescruffytrader.com.